Bitcoin's having a horrific week. It's down 10% today, and it's on track for its first losing month since 2018. It was a one-word tweet from Elon Musk on Sunday that triggered an 8% drop. The Tesla CEO responded indeed to a suggestion the company would dump its Bitcoin holdings. He later clarified and said it wouldn't. Now, that was so far, but crypto is under pressure from China, which caused price volatility and speculation in Bitcoin and in the markets, a danger to people's property. Kristin Smith is the executive director of the Blockchain Association. She joins me from Washington, D.C. via Skype. Now, between Elon Musk and the Chinese regulator, who's doing the most damage?
Well, yes, it's certainly been a rough day for Bitcoin prices and other cryptocurrencies, but I do think it is important to put crypto prices in context. Yes, Elon's tweets over the past week have moved prices. There were some reports out of China that really were nothing new, by the way. But I think there are multiple factors going on that are contributing to the prices today. And we've seen this not just with cryptocurrencies, but also with stock markets and other commodities out there. But as this segment just before this discussed, there's a tremendous amount of geopolitical unrest happening right now. We had a really bad report on inflation this week. And we also in the United States are very concerned about potential tax increases. So I think there's a lot going on. It's important to put it in context and realize that there are multiple factors that are impacting the markets right now.
Right, but if China decides that crypto needs to be regulated, or at least there needs to be restrictions, for example, as they have done, financial institutions being unable to trade, deal, or otherwise be part of, that's a black eye for crypto.
Yes, I mean, listen, there's a lot of activity with the Bitcoin network and other cryptocurrency networks out of China. China is one of the leaders when it comes to mining these currencies. They are very active in that process. There are restrictions about using cryptocurrencies in payments, largely because they have their own central bank digital currency. But you know, crypto is more than just China. China is obviously a major global player and is important in any market, but we have a tremendous amount of activity going on in the United States and Europe and elsewhere. And, you know, I think that what happened this week really isn't news. It is their same policies that have been in place for some time.
I do wonder, I mean, you're obviously right in terms of the rest of the world is larger than, if you like, the single market out of China. But I do wonder now, at what point are we seeing a shaking out between Bitcoin and the other currencies, and at the same time we are waiting for some, say, official euro crypto from the ECB, or the way in which the established central banks are going to move in. If they do, does that kill off the rest?
No, I don't think so. I think there's a fundamental difference between these central bank digital currencies, which are really centralized sort of digital forms of fiat currencies, versus the other crypto networks out there, whether it's Bitcoin or Ethereum or Filecoin or any of these networks. These are connected computers that have open source software that are providing a kind of specific function or purpose. And some of them are not necessarily designed to replace day-to-day payments. In the US, we're seeing a tremendous amount of innovation around dollar-backed stablecoins like USDC. This is a token that is backed by a dollar in a bank account. So I think that there can be a lot of, you know, that both sides can benefit from one another, and that these central bank digital currencies will not replace the innovation that's going on in crypto networks and other areas.
How do you take the Wild West nature out of it? How do you give it an element of sobriety? Because at the end of the day, look, I'm aware that there are lots of speculators out there who are loving the Dogecoin roller coaster, but a serious investment requires an element of volatility predicated by a certain amount of stability.
Yeah, no, that's an excellent question, Richard. And I think there's a very good answer to that. I mean, if you see, you know, stocks are down today, commodities are down today, cryptocurrencies are down more than those other asset classes. And the reason for that is that, especially in the United States, there aren't futures or derivatives products in any kind of robust and meaningful way that can help with price discovery. So I don't think we would have seen such dramatic moves in the market, in the crypto markets today, if we had a robust futures movement, because that would provide some indication as to where prices are going and sort of would ease the transition there. So I do think we have some work to do in terms of having better price discovery. But these crypto networks, Bitcoin's been around for 12 years now. They're popular assets, and if you compare it to where we were a year ago, Bitcoin is up 300%. So that's a pretty amazing thing. So we can't just look at one day. You have to really look at the big picture.
I guess, of course, it depends if you got in last month or this month or last year.
Yes.
But then that's the same for
relative.
every stock in the market. All right, good to have you. Thank you. We'll talk more. I appreciate it. Thank you.
Thanks for